All right, so if we get a pullback, where do we want to be buying? Right. So yesterday we talked about why it's important to be, from a long-term perspective, it's important to be very disciplined, or exercise discipline when it comes to not buying here at what is a very, very high risk time to buy. Now, Phantom could get continuation to the upside without even getting a pullback, but I would expect some sort of a pullback here in the short term before continuation upside for most of risk assets. That's my general thesis right now. I think, short-term pullback followed by continuation, probably followed by recession and a larger pullback in risk assets later in 2023. But we're speculating. We're getting a little too far out for this evening. I just want to be talking about potential levels to buy a dip and play continuation from a short-term trading perspective, in and out. I am not looking to buy Phantom, right? If it pulls back to a key support level that we're about to identify, say 40 cents. I don't know what it's going to be yet. Say it pulls back to 40 cents. I'm not buying at Phantom at 40 cents for a long-term hold. I do think there's a chance that we see further downside, or maybe, just a retest of these lows later in 2023. There's high risk of recession, right? So we don't want to be buying up at these extended levels for on a longer-term time horizon. But if we can get in and get a little couple-day swing trade in, right, and extract money from the market, that's great. And it does look like we are in for a correction. Of course, we don't know for sure, but we're seeing some signals. Let me actually go back to Phantom for just a second. We talked about, the bearish divergences that we're seeing and how risky it is. Even if we do get continuation, we're overextended on the easy bands. We're printing bearish divergence on the daily. Yes, we could get another leg here, and it could make you, want to FOMO even worse, but it's just too high risk to buy. We need to wait for a pullback. We need to wait for some of these indicators to reset. We're already seeing a pullback over like 10%. Right, well over 10%, from 66 cents all the way down to 55, 56 cents already in just Phantom, right? The other indicator that kind of fits, supports my idea here, and is one of the contributing factors to this, the idea of a shorter term pullback, is the fact that we are seeing DXY here. That's the dollar currency index, which is, just the strength of the dollar as measured against a basket of other not cryptocurrencies, foreign currencies. We're seeing DXY spike, and DXY is very often inversely correlated with the crypto market, with S&P 500, with risk assets in general, right? So this is indicating over the last 2 days, really, we got a large spike, two large green candles, and today we've just opened here. It's Sunday evening on the East Coast. We've just opened this new daily candle on DXY, and it's holding these levels so far. So in the short term, it does look like this could cause a little bit of a correction in risk assets. And we see risk assets might be a little overextended. S&P 500 pumping really, really hard. Bitcoin pumping pretty hard. Crypto market and altcoins pumping pretty hard. So maybe this is a signal that these markets are due for a little bit of a reset, a little bit of a gut check pullback, as I've been referring to it. However, in terms of the underlying thesis for continuation to the upside for Bitcoin and crypto and risk assets, and continuation to the downside for DXY after maybe a little bit of a pullback here to the upside for DXY, is this: we are almost certainly going to print bearish divergence for DXY, right? Which would be bullish, right, for the S&P 500. So once this stab upwards finishes, our RSI is already making a higher high, right? So as long as we come up and continue to make a higher high and don't surpass 105.6 with this, initial stab upwards or correction here in DXY, then we're printing bearish divergence. It's extraordinarily likely. We still have for DXY, another 2 to 3% to go before bearish divergence is not on the table anymore. So it's looking very likely, in my opinion, that we do get continuation out of DXY, continuation out of the rest of the markets after, right, this spike, shorter term spike plays out and causes a bit of a correction. So yes, there's no guarantee that this is going to happen as played out or as I've just outlined, but we've got to take the data that we've got and make reasonable assumptions. And I think those are, there's some supporting data points that, kind of are shaping my thesis around what the market's going to do here in the short term and midterm. So, all right, let's take a look at where are we buying Bitcoin for a long trade if we see a pullback. And keep in mind, right? Look, we've come up to test this region before, and we've obviously are coming off of a much more aggressive upside move versus an aggressive downside move. This was more of just like a dead cat bounce, a little bit of a short squeeze or a correction, whatever you want to call it. And this is actually a move that has broken bearish trend structure, bearish structures in Bitcoin's chart. And that's why I do think we're likely to get some continuation. However, right, and we got plenty of support below us. However, it wouldn't be too crazy for us to see a bit of a pullback here for reasons I've already discussed. Let me actually just throw on RSI just to show you guys, hey, bearish divergence right there, right? Bearish divergence right there, and even stronger bearish divergence on Bitcoin that we've been keeping track of, at least on the 4-hour here. Right, so we'll go back to the daily, we'll go back to throw on our margin pressure levels, and we'll actually start going through these levels for Bitcoin, ETH, and the other cryptocurrencies that you see here on the right. So support, buyers are in control of this market, and we want to look at the long margin pressure levels. So where can you no longer go long, or where can the market no longer go long on Forex leverage and hide that liquidation point below what has thus far been the bear market low? That's 2638. So this is a level that we've been watching a little bit, and I know a lot of people are super bullish right now, and they don't think that Bitcoin can get there. Guys, this Bitcoin can get there. It is 10% away. People start getting panicked again coming out of the nasty bear market we just got. I promise you, like, Bitcoin can drop 10% in a day and freak people out, right? And we want to be the people that are paying attention to what Bitcoin's doing. We're going to be looking at RSI. We're going to be looking at our support levels. And if we start printing bullish divergence here on the daily or the 4-hour, that's going to look really attractive to buy in this region. And then 19,348, if we really kind of wick down and start slicing through that level, 19,348, it looks like a really solid level to buy. Likewise, not getting too fancy here, just going to continue to use the long margin pressure levels here. Ethereum actually making some support on top of 1612, catching it as support right now. If this turns into a deviation, we go further below, we are looking at 1433. And there are quite a few, 1343 as well. There are quite a few support levels in here, but the big one, the big level is 1340. There's so much confluence between many different support levels, including this 5x long level that we're looking at right now. So again, maybe we get continuation, and maybe we find support and continue on to 2150. That's our upside target. But from a shorter term trade, I don't want to go long here. I would rather go long from a lower place. So we don't know if this is going to happen, but if it does, I'm prepared for that scenario, and I'm looking to be a buyer, especially at 1343, 1344, give or take, right? That region, right? So this is a scenario that I'm preparing for. This is not a prediction, right? We've been long Ethereum, spot Ethereum for a long time here, right? I would love for this to go to 2150 and not even give me a chance to buy at these levels for the shorter term. I would not care. All right, I'm bullish on Ethereum, and I could absolutely see continuation up into the red easy band levels. We're just identifying potential scenarios that we could take advantage of. All right, from a shorter term trading perspective, right? But right now, it's just too risky for even in the short term. We buy here and then we pull back to 1433 or 1340, and we get liquidated. That's no fun. All right, Matic breaking out to $1.20. Let's clear this out a little bit. And just focus on our long levels from our our range low here. So support here at 1035 and 1045. That's been a zone 1.035. And I know I just kind of said 1045. That's just a level in a zone that I've been tracking and have been familiar with. If we throw on the short levels, you'll see it lines up at 104.5 as well. So that would be, looking at our range here. Right there, if we just kind of draw it structurally, get rid of the long levels, we see our range. We had our deviation, FTX collapse, but otherwise it pretty much held this range. Breakout, retest, continuation would be pretty textbook here. And something that I think is pretty likely. So if you get an opportunity to buy Matic at 103 to 104, that's pretty attractive in my opinion. All right, Arweave. We just put out for Sistine Research, put out I believe it's a 17-pager report on Arweave. So if you're interested in Arweave from a longer-term investment perspective and what its value proposition is, definitely go check out the link in the description below, Sistine.ai. From a shorter-term trading perspective, off of our recent low, we are running into that resistance. Let me get this a little bit cleaner. Yeah. Pretty clean resistance here, struggling to get over 1214. Why? Because you can no longer long on 2x long leverage and hide that liquidation point below that local low. So a 2x to 3x bounce would be a very solid opportunity, and that's going to give you, that's going to require roughly a 40% or 30% correction, right here to 25%. For some reason, I thought it was 33%. 25% correction, probably about a 30% correction from the actual top here. And that's going to be at $9.11. $9.11. So that would be the level that I'd love to go long at. Back, it's also a support level, right? Just a structural support level, right? We've seen plenty of support in this zone in the past. So I know people love to get bullish and they like to say, well, Arweave's not coming back down to $9.11. So you're going to miss the boat. Guys, look how extended this is. This can absolutely come back down to $9.11. If you think that it can't, then you're probably FOMOing in too high. Solana, everyone's favorite coin. Solana off of our recent low. Solana's a little bit tricky because we have these very kind of wild. We have this wild unnatural wick, but we did get a little bit of chop around $16, and that's a level that I'd be pretty comfortable buying. And I think that would be a really major gut check for Solana. And I think people would, the market would definitely come in and probably buy here, and we'd see a bounce. I don't know if we'll go this far down because I know the market's pretty bullish on Solana, and just looking at this price action starting to form a little bit of an ascending triangle here, which would indicate or signal further upside, but we do need to be careful. Like if the S&P 500 starts spilling over, Bitcoin goes down to 19 or 20K, we could definitely see a gut check out of Solana, and we want to be prepared for that. So while it seems less likely that Solana is going down to $16, it's still the scenario that would make me comfortable, or at least that I would require to be comfortable buying, right? Or at least I believe it would be a strong opportunity to buy. And that's what I'm identifying here. By no means predicting, hey, Solana is going to $16. Again, what I'm saying is that if it does go to $16, I'm a buyer at that level for a short-term trade. Last but not least is Phantom, which has recently really probably been everyone's favorite cryptocurrency instead of Solana because, right, that's what the market's telling us at least, right? Everyone seems to be buying some Phantom. All right, off of our last low right here, we'll call it, give or take this zone, this region, gives us a pretty decent level there at around 38 to 40 cents. If we pull this back another notch, that'll give us kind of an interesting zone around 33 cents. Let's check this out. Let's bring this up a notch. Yeah, and this is extended enough that I don't mind using the short levels. This is our last one of the evening if that ends up being our top. Okay. So this one is a little bit messier. And quite honestly, a little bit more cautious to approach Phantom here, as aggressively as this has moved, and how we're not getting a ton of confluence here. So on the long levels, we bring these back to this level. That's going to give us 33 cents, maybe all the way up to 40 cents. 40 cents is probably pretty decent, but I like to be pretty accurate with my entry points. I like to feel very confident and get a lot of confluence. So I'm going to say, NA, not applicable, as this is a no trade zone for me, and we don't need to find trades on every single pair. Now, look, if you wanted to trade more structurally here, be my guest. This 29 to 30 cent region does look like a fairly strong support level structurally, maybe even up all the way to 36 cents. And we could, see a pullback down to this range, see the 21-week simple moving average come in, act as support. Be my guest. That's probably a fine trading strategy. We also have that trend line that's going to be coming up here. So there's some trades to be made there, but that's a no trade zone for me. I don't see anything that's just screaming massive support level. So for that reason, going to leave Phantom blank for this evening, guys. Thanks so much for tuning in. If you want access to the research hub, Sistine Research, go check out Sistine.ai. We've got the Discord group, the research hub, and the professional group. Go look at those. The research hub is a hub of research reports, plays, principles, and recently we've put out 8 airdrop guides. So these are step-by-step guides, not video, just written instructions. Do this, do this, do this, right? Step by step. That will help you get the best opportunity and chance to qualify for airdrops for all of these major projects coming out. And my goal with this section is to just offset the cost of the research hub for people. I think that if you can just make back your money, and hopefully more, but if you can just make back the cost of the research hub through these airdrops, that would make me super happy. And then you're essentially free rolling all of this great research. We just put out about a 20-page blockchain gaming report that will help you conceptually understand the blockchain gaming space and how to benefit from it when it inevitably becomes a investing narrative within the crypto space. Guys, last but not least, check out the link in the description below for Bybit if you want to trade on leverage. That's my preferred exchange. Thanks for tuning in. We'll catch you next time. Peace.